Hi folks, it's Monday the 7th of March. We're in March already, end of the third quarter. So I haven't been doing some videos for a little while. Apologies, I've been really busy running around, I've been traveling a lot, so I haven't really had the time, but I'm going to try and make that up for you now. I'll record a few videos today, so keep your eye out for them as they are released. But I'm going to start with crypto. Bitcoin, probably one of the quieter markets when you compare what's going on in the Forex markets and commodities and stock markets, not really being affected much by this huge tensions in Eastern Europe. So Bitcoin definitely not a safe haven, definitely not an inflation hedge. Bitcoin has been capped at the 100-day moving average, the blue line you see there. As you can see, we're forming some sort of sideways wedge, some sort of sideways triangle, definitely caught up in a range there. The blue line is the 100-day moving average, the green line is the 500-day moving average, the red line is the 200-day moving average. So as you can see, the price is trading below all of these three major long-term moving averages. Every time we've tried to rally up, we've been stopped by at least one of them. The last time the blue 100-day moving average clearly stopped Bitcoin in its tracks. So really not looking good for bulls. Not a surprise, as you know, I've been a bear for a significant period of time, pretty much called the high in Bitcoin anyway, and since then I have been bearish, and selling into strength has certainly worked for me. But for now, we're definitely stuck in a range. Those are the parameters, sort of 35,000 on the downside, 42, 43,000 on the upside. I'm just going to wait for that to break. But if you're scalping and you're buying in sort of mid 30,000 area and selling in the low 40,000 area, that's certainly a strategy that can work at the moment. Ripple, of course, not looking particularly bullish either, probably looking weaker than Bitcoin. As you can see from the chart, again, the green 500, the blue 100-day moving averages are definitely doing their job. As you can see, the market's in a bear trend, basically. Again, maybe a triangle we can see forming there, but I don't see any reason why this crypto market can go up. If you can't go up on this major war going on in the Ukraine, and if you can't go up with inflation going absolutely through the roof, I mean, oil up at $130 a barrel today, gold up at $2,000 an ounce. You know, if crypto can't go up in these unprecedented times, then I really don't see much hope for the bulls in these markets. Ethereum is unsurprisingly a similar picture. We are in a bear trend. I see this sideways action as consolidation. In that bear trend, the green line is the 500-day moving average. That's being tested as I speak, not as I write. In January, that did hold the downside. We spiked below it, as you can see here, but then we saw a quick recovery. In February, again, we spiked below it, but we saw a quick recovery. But each peak was lower than the previous peak. So this does indicate that we're still in a bear trend, and this is just a consolidation. We've got the moving average crossover, the 100 crossing below the 200. As I say, we're testing the 500-day moving average. I personally can't see any reason to buy this. Fundamentally, as I've already mentioned, if we can't go up on higher inflation and war, then really this is no safe haven at all, certainly not an inflation hedge. My big worry now is that we break below 2400. You can see this trend line going back to the beginning of 2021, so it's a 1-year trend line. 2380, I would call it 2400. We break below there, and I would fancy that rather than a break higher. I think there's more chance of us breaking below 2400 than there, and that's the 500-day moving average area as well. I think there's a greater chance of that than us breaking above the sort of 3100, 3200 area, which would give us a buy signal. But even then, we'd have to get through the 100-day moving average, which I guess by the time, even if we were to recover, by the time we get there, that 100-day moving average would be adding extra weight to that low $3,000 area. So really, I favour sideways with an eventual break to the downside. I can't give you the timing, I really don't know, but that's what the picture looks like to me for crypto. Hope that's helpful. Keep your eyes peeled. Do like, share and subscribe if you can on the YouTube channel, and then you will get notifications when I bring out more videos.